Hey guys, welcome back. Today we are going to do a summary on Alibaba stock. So do I like Alibaba as a company? Not really. Do I think it has massive growth potential? The answer is no too. However, I will still be buying Alibaba call option because I believe the worst is over soon. And Alibaba's price itself looks mispriced. So before we begin, do help me out with a quick like for the algorithm. Thank you. Okay, first of all, let's start from the first principle thinking. Where does Alibaba's revenue come from? I'll play a clip from New Money showing where all the revenue segment come from. In my opinion, he did the best job explaining in simple terms for viewers. I will also link the video down in my description below for you guys to research more.
Consumer e-commerce site much like eBay. At this time, Ma also launched Alipay and would later invest in Tianyao, which forms Alibaba's Iron Triangle, their competitive advantage that we'll talk more about in a minute. On the back of Taobao's success, Alibaba then launched Tmall in 2008, which is a business-to-consumer e-commerce platform where global brands could sell their wares to Chinese consumers, which again stepped up the growth in Alibaba. Now today, these still form the core of Alibaba's business. However, in recent years, Alibaba has also broadened their horizons, creating a cloud business, entering into the video streaming and entertainment space, adding a food delivery service, a travel agent, and much more. But with Alibaba looking like a bit of a conglomerate today, their number one business segment remains e-commerce, and that's where we'll start. So core commerce is still by far the most important revenue category for Alibaba. This can be broken down into China e-commerce, both retail and wholesale, and cross-border and global e-commerce, both again retail and wholesale. While Alibaba continues to grow cross-border e-commerce platforms like Alibaba.com, AliExpress, and Lazada, those are Alibaba's websites that we can access. The majority of their business stays within China and hinges.
The problem Alibaba was trying to solve was to eliminate the retail middleman. A retail needs a physical shop front. You need to hire cashiers, store helpers, and pay for logistics to move the product to a physical store. By connecting buyers and sellers directly with e-commerce, you can remove the rental, labor, and logistic expense. So this forms the core segment of Alibaba's revenue. But of course, just like the clip I played, Alibaba is more of a conglomerate now, and they are trying to find new avenue to grow. So the question now is Alibaba's future at risk? To answer that, we must first take a look at what makes Alibaba dominant. So for example, to start an e-commerce company like Amazon and Alibaba, you must first have the website for people to transact. You must have the infrastructure built ready for packing and moving products quickly. And then you let the network effect take place for more sellers to connect with more buyers. But what good would it be if there isn't a trustworthy payment system? For buyers to feel at ease knowing that they are going to receive what they paid for, Alibaba have Alipay to solve these transactional problems, and Cainiao for these logistical problems. And even if you have a good payment system, what good would it be if you are unable to deliver your goods from sellers to buyers? So having the e-commerce website, the payment merchant, and the logistics platform set up is what Jack Ma called the Iron Triangle. Each year, the infrastructure just gets better and better, and the barriers of entry for competitors gets higher and higher. And also, Alibaba Cloud provides 8% of the total revenue now, which is likely to grow significantly in the future, just like AWS. So what started this entire crisis? Alibaba was accused of being a monopoly and was under China's government's investigation. I found this post in February from Ma Mimu. Her family runs an online store on Alibaba's website. So she said, and I quote, that most of the online shop operators have actually supported the Chinese government's intervention. Because Alibaba have really monopolized China's e-commerce market, merchants have no negotiating power with Alibaba because Alibaba is the dominant power. If you want your product to sell well in Alibaba, you will have to pay advertisement fee. And advertising fee is very expensive, especially when some products do not have high profit margin. Alibaba also forced sellers to sell at a very low discount, especially when there is event like 11/11, and the cost of promotion have to be borne by the sellers. So if the sellers do not advertise or participate in such activities, their product will be ranked after 100 pages, which is basically impossible for anyone to see your products. So Alibaba also forbids sellers to sell on other e-commerce websites. So if they choose to register on other e-commerce, their traffic in Alibaba gets cut off as well. And shortly after that, Alibaba's financial arm, Ant Financial, has its IPO cancelled by Chinese regulations. So this puts a lot of selling pressure on Alibaba. So what makes me want to buy into Alibaba now? So you must know that only smart money has the ability to plunge Alibaba's share price from $318 to half at $150. That is eliminating half the market cap of Alibaba. So knowing that the institutional investor did this, I've been watching and studying Alibaba's chart for quite a while now. It isn't particularly attractive for me to buy in because I do not want to catch a falling knife. But I believe the worst is over now, because at August 23rd, I saw a huge volume transaction here. So 88 million shares were bought and sold that day. The retail investors definitely do not have this kind of money. So on average, Alibaba has about 10 to 20 million shares transacted per day only. Smart money finds Alibaba cheap at $152 and are starting to support, buy and accumulate Alibaba at this price zone. So this is when I know the free falling knife should be over soon. I'll be using my previous put option profit from last month to take a bet on Alibaba call option when I find a suitable entry price. I prefer to enter around $150 to $160 if there is another chance. So from the technical chart, we can see the $148 is the crucial support level, and if it breaks, the next support will be at $130. What are some of the key risks investing in Alibaba? So first, Alibaba is incorporated in Cayman Islands. The structure is risky and may even be illegal in Chinese laws. And also, China is an authoritarian state, meaning to say that the state has the most control. Companies will have to bow to the Chinese government. However, it is not all bad. I just see these 6 months of regulations necessary to pave the way of a structure to not let future companies misbehave and get control over the Chinese state. I just find Alibaba mispriced from a technical point of view, and after confirmation from Smart Money buying back Alibaba, I see it as a setup for a low risk trade, and hence I'm making a small bet on Alibaba with my last month's profit. I hope I managed to cover all I have to cover for today. If you like my video, don't forget to subscribe to my channel. I'll see you next week.